Candle Range Theory Trader back with you with another video on the deep study of the third candle of the Candle Range Theory. One candle, 1 hour. So let's get into it. The goal of this deep study is to make you an expert of identifying and trading the third candle of the Candle Range Theory. We're going to focus on the behavior of the candle so we know when to get into the market and to stay out of the market or the candle. We're also going to be focusing our trading on the first 1 hour of trading. Any other models you want to trade are on you to back test. Okay, but this is the framework. Now, in terms of time frames, we're going to be looking at, we're going to do mostly 4 hour, even though I shifted to the 8 hour, but I still do the 4 hour occasionally. But because the 8 hour isn't available on the free version of TradingView, I decided to make this for the 4 hour so everybody can get it. So the scaled down charts or the lower time frame is all going to be 5-minute charts. Now, quick lesson in candlesticks. Obviously, you have various types of candlesticks, but we're focusing on this candle right here where buyers are in full control. So big green candles and larger red candles. Okay. All these other candles here, the dojis, this one, this one, this one, this one, and this one, we don't want that. Okay. Definitely don't want any indecision. So this is price action we want to stay out of. We're looking for straight rises and straight drops. Okay, so if you want to screenshot this or just make note of that in terms of candlestick strength, you can do that. Now, obviously, the focus of our video, or at least the focus of our trading, is going to be this third candle, as I've gone over time and time again. We are not trading this candle here, and we're definitely not trading the initial range. Okay, we're only trading the third candle, whatever we perceive to be this downward move. Okay, so because we're focusing on the candle and not necessarily candle range theory, I'm going to go through any candle on the chart that displays this type of behavior right here. Okay, so I'm not looking at the whole candle range theory. I'm only looking at these candles to really study how they move. I hope that makes sense. So this is not a lesson in the candle range theory. This is a lesson in recognizing these candles. And then we take these candles and put them in this pattern. So I'm not trading random expansion candles. I'm only trading them in the reference of candle range theory, but this is just a lesson in how to recognize, okay, when a candle finishes and looks like this, what does it look like on a lower time frame? That's the point. So that's the point of this. Okay, so this is going to get real repetitive, but the point is that we have to train our brain to know what's normal for a candle's behavior and what's not normal. So let's go on. Now, as well, these candles are what we want to happen, but there's no guarantee it's what will happen, because when we go back to our candlestick patterns here, let's remember that a candle can open, go up, and then come back down, right? It can end up looking like this. You can think you're going to get this, but you can end up like this. Or you can think you're going to get this, but you can end up with something like this. You can't predict it. There's no way to tell where the candle will close. So I don't want you thinking that as well, all right? So we're going to look for common identifiers. So here are my rules for the third candle in the candle range theory. Number one, from the candles open, the wick cannot be more than 10 pips. Okay, that's my rule. Okay, if it's above 10 pips, if price goes above the open of the candle more than 10 pips, I'm not interested. All right, that's me. That's how I keep my, I get rid of pairs that may not work out. Okay, I hope that makes sense. As well, I only have 1 hour to trade. Okay, the first hour of when that candle opens is when I look to get in. After that, the rest of the candles should be spent going in my direction if I'm right. Okay, it has to pay me. If it doesn't do that, then I get out. All right. Fair value gaps. If you don't know what a fair value gap is, I'm going to challenge you to look into that on your own. That's not the point of this video. But when a fair value gap does develop in the candle and it shows momentum, it should not get taken out. And if it does get taken out, I'll throw this in as well. The very next candle should reverse after it closes out the fair value gap. Okay, and I'll show you this in a second. So you're allowed to make your own rules. These are just mine, but this is how I trade to, like I said, put the odds in my favor and prevent me from over trading. So let me take a quick sip of some juice and we'll keep going. Alrighty. Now this is just a basic crude drawing of what I expect price to look like when the candle's done. So remember I said 4 hours. So I wanted to break it down into 4 sections. The first hour, let's just say this is 9 o'clock on the 9 a.m. candle. You're trading New York session. You only trade here. Okay, so price may come up a little bit. It may dance around. This is where the candle opens. But I always designate, okay, what's 10 pips from the open price? And if it closes, it can wick it. But if it closes more than 10 pips above the candle's open price, I nix it. I get out. Okay. Or I don't even take the trade. Okay. So I give it time to see what it's going to do and go from there. Okay. And then, but all my entries are shoved into this first hour. This is the key time frame. After that, I'm either going to be wrong or right for the next 3 hours. Okay. But I'm not trading here, here, or here. After that, if I'm right, what I'm expecting is small little retraces and fair value gaps to develop in my direction. Okay. Third hour, I want to see price retrace, but then ultimately take out, all these lows. This low right here gets taken out. This low gets taken out. This low gets taken out. This low gets taken out. And then by the fourth hour, I'm getting ready to exit if my take profit or risk to reward hasn't already manifested in the first 2 to 3 hours. Sometimes you won't even have to wait till the fourth hour. So it really just depends. All right. So this is how it looks on a real chart. This is a 5-minute chart. Okay. So hour one, all trades are here. Get in where you can. Even if it's just right here on this fair value gap, that's fine. If that's your entry, so be it. Stop loss can go above the first candle in the fair value gap in that case. This isn't really about entries. This is more about recognizing the candle's behavior. But you see here, the third hour, here and here and here, you're not trading anymore. This is your trading window right here. So price opened, danced around a little bit, straight drop, consolidated, okay, solicited some buyers and then quickly took them out. This is ideally a framework of what you look for if you're expecting a red candle with a straight drop. Something like this. Will it look exactly like this the whole time? Of course not. Okay, but again, you get retraces and fair value gaps, and then you exit. Okay, 4 hours. Okay, now for the long example, just the same thing in reverse. I only trade the first hour, then the next 3 hours are spent paying me if I'm right. Okay, retraces and fair value gaps, yada, yada, yada. All right, so here's the real chart. Now, what I talked about when I said fair value gaps that may get taken out, this right here did have a fair value gap. Candle 1, this large candle was candle 2 and candle 3. See this gap in price? Notice how price came back, closed out the gap, danced around a little bit, and the majority of our profit was received on the last hour. But either way, so this is a case where you would have had to hold till the candle close. But as long as your entry is holding steady and price doesn't typically go below the open price of the candle, you're good. So sometimes if you were had the candle and you saw it in real time, the larger time frame candle, you'll see it be green and then get smaller and then just go ahead and expand up for the last hour. So, this right here was just to solicit all these shorts. But everybody who went short here and here got destroyed on the last hour of the candle. So that's just something to be ready for. So the main litmus test for this is you don't want to see the candle flip because this was the open price right here, the candle never turned red, right? It stayed green. This first entry candle here, it held. Okay, it got a little scary right here, especially if you're scaling in, but the last hour really came through and you still would have made money on this trade. All right, so that's how that would have worked out. Now, an indicator that can help is the Marubotsu bull candle and Marubotsu bear. I hope I'm saying that right. I'm probably not. But the candle, I'm just going to call it a expansion candle. Okay, but this is the technical term for it. It is a type of Japanese candlestick pattern that is characterized by a long body with no or very minimal wicks, okay, or shadows, either way. Okay, so it's just a strong down close candle. That's all, or up close candle. Okay, and remember, if price does not behave the exact way you expect it to, get out. Okay, you have to be merciless. If you want to last in this game, you have to know what you're looking for. And when price does something strange, save your money for it when it does. All right, don't hold and hope. That's not a strategy. So let's go to the charts. So we're going to start on just a random pair, which is Euro Aussie. This is the 4-hour chart. I already got the indicator saved, but I'll show it to you. Let me get rid of that. Okay. So let's see here. The direction or the expansion candle indicator is this one right here. If you type in MARUBUZU, just this one right here, black and white. Okay, the bearish and the bullish one. That's what you're looking for. There's some others here. You may want to if you just go to indicators and type in Marubozu, you may see some others, but these are the ones that made the most sense. All right, so when you slap that on, you see there's not a lot of them. Okay, now at the same token, the indicator may not pick up all of them either. Like it picks up this one here. Let's see, but it didn't really get this one. So sometimes what I'll do is I'll measure the wicks. It didn't get this one either, so I'm not sure why it's not getting a lot of these. But at the same time, what you're going to do is when you see a candle, you just drop down to the 5 minute and see how it behaves on the lower time frame. Now, remember too, because of the wicks, if it's above 10, I don't look at it. Like this one right here. Well, no, not this one. Like this one right here. Let's say for instance, this one right here. I measure this down close wick and it's right at about 8 pips. So this would be a good candidate. And this was at 9 a.m. So remember, I'm not looking at candle range theory. I'm only looking at these candles to study how they act. So I'm going to use this one first. So all I'm looking at is this one candle to see, okay, how does it look on a 5-minute chart? So I drop down. The first thing I would mark is the open price. So I go to 9 a.m. and that's the candle there on 5 minutes. So I'll mark that. Now I've got distribution open price, okay? And then next thing I'll do is I'll mark 10 a.m. because that's my trading time frame. I'll just put a little line there, right there. All right, so that's my trading window right here. I'm going to get rid of everything else. So this is from 9 to 10. All right, okay, 9 to 10. And then I just study this to see, okay, that's the whole candle right there. That's 4 hours of price action. And I just study it. Okay, you look, all right. I see the first opening candle right here. Could have entered anywhere. I could have entered at 9.55. What's my risk to reward on something like this? What type of risk to reward could I get away with? Could I get away with like a 10 pip stop loss? Looks like I could have. What would have been the return on something like this? Look at that, 1 to 10, 1 to 15. Okay, that's not normal. Okay, so don't. This is not the norm. You're not going to hit 1 to 15 every single day. Okay, you're just not. Believe you me. Okay, but at the same time, just this one candle though, that's what it returned. Okay, this is it. But again, I'm not trading after 10 a.m. All my hope is built in this little tiny range right here, from 9 to 10. All right, from 9 to 10. And then what you can also do, what I'll do is I'm going to put these in a journal. So let's do that. So I'm not sure on the free version I have the paid version of TradingView, so I'm not sure how detailed the capabilities are. But what I like to do is click the little camera here to take a snapshot, copy the image, I paste it, and then I do all my typing in Google Slides so that I can amend the typing if I need to. I used to type directly on TradingView, but I stopped that because once you type it and then take the picture, you can't change the text. So I would just type in something like, 9 a.m. expansion candle, 10 pip stop loss, 150 pip rise, entry at, the entry, you could have entered really anywhere, but your best entry could have even been at, let's say about 9:15. Right? Okay, something like that. And then as well, what I would do is I will get the whole candle too. So I'll get rid of this and this. I'll go back to the 4 hour. And then I'll just take a snapshot of like the finished candle, something like that. So I'm just adding this and I'm going to put it on my journal later. So then I have the big view here. Okay. I got the larger time frame. And then when I scroll, I can refer back to this now. So that's what I would do, or that's what I'm doing even right now, because I'm going to put this in my journal. So we're going to get rid of all that, get out of the replay. Let's find a bearish example now. Here's one right here. Now, I'm not going to do 1700 or Asian session. I just don't have an interest in that. Let me get the indicator. Okay, it's still up there. All right. So let's see if the indicator will give us a bullish one. We're going to reset the chart view. Actually, let me go to another pair. Let's try pound CAD. Okay, and here it has one here for us right there. Okay, this is at 1 a.m. So London session, that'll work. So I'll do the replay. And remember, I'm not doing candle range. I'm just studying the behavior of the expansion candles. Okay, so all I care about is this one red candle right here. And then I'll put it in CRT later when I'm trading live. But for now, I want to see how do these candles act. So now that I got the indicator, I will get rid of it. You can mark your opening price on the larger time frame if you want, and then just rescale it a little later. So I'll put my opening time frame right here. Then I'll go to the 5-minute. And then I'll just confirm it here. So that was the 1 a.m. open right there. And then you're only trading the first hour. So that's 2 a.m. I will mark that right here. The best ones go straight into profit. Typically, your best trades, as soon as you enter them, they'll go straight into profit. And then let's see if we have any fair value gaps. For the fair value gap indicator, I use the one by Nephew Sam. So it's a basic one. Now, remember too, sometimes fair value gaps that are made here may get taken out. So if I go back a little bit, I just want to see if there were any in this initial trading time frame. I don't think there were. Okay, no, okay, here was one here. It did get erased later. So let's see if I do this. And let's just do the trading time frame. So I'm going to go up right there. Okay, that's right at 2. Okay, so let's just say this is all we see. So I'll say I come to the chart at like 155 and say, oh man, did I miss it? Did I, you can just do your stop loss and take profit. You can amend it to the top of this fair value gap if you want to. You want to put your stop loss wherever you hope price doesn't go. And remember, you're always hoping that it doesn't flip colors. Now there's no wick here. So that fits the criteria. It didn't go up past 10. So you have a few options. You could either put it here above this fair value gap, or you can put it here above this one. So that would be like a 15 pip stop. This would be you can say about a 10 pip stop. Okay, so either way is up to you. But let's just say for the sake of discussion, though, we were at the chart. We saw this fair value gap, and we entered right here. So we got a nice and tight entry. Okay, believing that price wouldn't go above this fair value gap right here, right? Okay, so now I'm going to mark the rest of the hours. You don't have to mark all the hours, but I'm just doing it for this one. So this will be 3 a.m. That is 4 a.m. And then we get ready to exit around 5 if our take profit isn't hit. So now I'm going to let it play out. Okay, bang, and there you go. Okay. Now from the entry to about 5, if you held to the candle's close or close to it, price dropped about 37 pips. Okay. So all that could have been yours. Okay, so that's that. And you see, remember we talked about, let's go back to our template here for shorts. Okay, you want to see those fair value gaps developing in hours 2 and 3. Did it do that here? Not in this one, they got taken out, but then it didn't rise above the open price, so that's good. And then hour 3, and well, just hour 3, it created some more fair value gaps to show that my price is moving fast and there's momentum to the downside. Okay, and that's it. All right, so we take a screenshot. And as well, okay, so let me do this. If you only want to trade London session, then just focus on London trades. Okay, you only need to be looking at the 5 o'clock a.m. candle. Really, the 5 o'clock a.m. candle. You can do 1 as well to catch the tail end of Asia, or just do 5 a.m. And don't worry about USA session, or if you're just doing USA session, just back test what you only want to trade if you're doing CRT. This, like I said, is for candle behavior. But if you're really back testing, just do the session that you're interested in. Let's see. So we'll get rid of the entry. Get rid of these lines. We don't need that. Okay. And get rid of the fair value gaps because we don't need that. And remember, we just looked at this candle right here, this one candle. So I'm going to just mark that with the arrow just so we know. Take a snapshot and paste it right there. Okay, I forgot when our best entry is, but I think it was around, let's see, 5, 10, 15, 20, maybe like 120, I guess. What was this for? This is 1 a.m. candle, 1:20 a.m. entry, 30 pip drop. Okay, so that's that. All right, then that's it. And then you just keep going. So let's do a couple more. Let's see. I mean, that really explains that. So I'll tell you what, I'll do a couple 8-hour ones and then we'll call it. So I remember 8-hour charts, they're not, I've got some questions on that. 8-hour charts are just 2 4-hour charts stacked on top of each other. You don't need them. Okay, like I said, they're not going to make you rich. So let's see here. Do an 8-hour distribution. Okay, so here's one here. What time is this? That's 1700. I don't want to do that. What's this one? Okay, this is 1 a.m. Okay, here's an 8-hour chart. Bearish, so that's good. So we'll do the replay option, same thing over and over. This is just a different time frame, but let's study this. No wick on that one whatsoever. I'm going to go ahead and mark the opening price. I'm not going to mark all the hours only because it's an 8-hour candle. We'll be here all day. But I'll mark the entry there. Whoops. Okay. No, not entry. I'm sorry. The open price. And let's get rid of all the indicators. And let's drop down to the lower time frame. Okay, so this was at 1 a.m. Eastern Standard Time. Okay. And even though it's an 8-hour chart, we're still looking at the first hour of trading. So the only vertical line I'll put on here is the first hour. But I don't care if it's larger time frame or smaller time frame. I'm only looking at the first hour. So if this was 1 a.m., I'm done trading by 2 a.m. So that's it. So that is everything. Okay. Notice, remember, the open price should act as resistance. Okay. To use a colloquial term. And then price should just straight drop. So this is all 8 hours here. This is from 1 to 9. Let me see if we have fair value gaps anywhere. I already got it. I may have to do the replay option to see that. Okay, but you do here, here, and here. There may have been others. There were some others that did get filled, like this one here. That one got filled. But these here, they should hold. Some of them should hold. The top fair value gap, ideally. Whatever the first fair value gap is that develops after once momentum starts to show, if those get taken out, normally price keeps going. I go ahead and take that as an early warning sign to go ahead and just exit the trade. Okay, so let's see here. There we go. Where's our best entry? Our best entry is at, try to be in around the open price. We could have did it around there. So this was at 140 right there on that candle's open. Could have had a nice short right there with a stop loss of, I would do 10 just in case. You know, I don't try to put the stop loss like right above the open because, as you can see, if you're too close, you would have got taken out by that retracement right there. So you want to count on the open price as being if it opens down immediately, you want to try to make sure your stop loss is above the open price. If you want to do above the open price by 10, that's fine too. That's a safe bet. But that's just my rule. So that's that. All right. So from this entry down for 8 hours, it dropped about 46 pips. Okay. So that would have been that. Obviously, of course, you could scale into the trade, but you know, that's up to you. But for now, again, this is just about behavior. This is how it looks for 8 hours. So we take a picture. Let's see, go down. We paste it there. And I'll go ahead and do the write up while I have the 5-minute chart up. So best entry would have been at 145. It was a 45 pip drop, 8-hour chart. Okay, so and then I'm going to zoom out now. Back to the 8-hour. Don't need that line. Okay, then, if you want to take a picture, and it's possible that the pictures of the larger ones may not be necessary because they all look the same. I mean, they're all just big fat green and big fat red candles. So, if you don't want to include the picture of the big one, you don't have to. Okay, but how this helps is that when a CRT appears, or you think you have a CRT that's going to start at 1 a.m. on the 4-hour chart or 8-hour chart, either way, okay, you just refer to this right here. Say, okay, price should do something like this. And that's where this comes in. All right, so that's that. And then let's find a bullish one, and then we'll call it a video on the 8-hour. So we'll get rid of this. Let me go to another pair. Let's try a yen pair. Okay, and we're looking for a bullish. And here's one. What time is it though? 1 o'clock is really hitting. 1 a.m. the London ones. Okay. Okay, and this is an 8-hour chart, so let's remember that. And this is actually the candle range theory. Candle 1, candle 2, that sweeps that low, closes inside. Candle 3, okay, right there. It's 8 hours of straight rise. So let's take a look at it. And what is the behavior? We'll get rid of the indicators. I will mark the opening price. And let's go down to the 5-minute. Okay, look at that. Like, you could have got in right at 1 a.m., but I'm still going to mark the first hour. So that would have been at 2 a.m., which is right here. All right, so there we go. Let's see if there's any fair value gaps. Sometimes you'll see a fair value gap where when you get a straight rise, you may see a fair value gap in your trading window, and you can use that right there. Bang, bang, bang. And that's a little mini candle range theory in the fair value gap. That is a great sign. Okay. But see all of that momentum to the upside. See, all that could have been yours. Okay. So our best entry, other than, of course, getting in right at 1 a.m., we'll just say, for instance, we were not sure. So we wanted to see a little bit of a retrace. We could have got in right there. And that was at 1:45 a.m. And our stop loss would have been about, you could have did a 10 pip stop loss on that. Risk to reward. Yeah, you would have got a 1 to 5 on that one once everything played out. Yeah, over 8 hours. So it went up above 50 pips, more than 50 pips. Okay, but this is a 1 a.m. Distribution candle. So we take a picture. I'm not going to do a picture of the bigger one this time because, I mean, like I said, they all look the same. Let's see here. I'll paste that. And there we go. Okay. So again, I'm limiting myself 1 hour. See right there, 1 hour trading. I'm going to get rid of all these bigger candles here because we know what they are. All right. So I'm just focusing on the behavior now. This one, I'll get rid of that. Okay. If you want to, you can. I'll tell you what, though, what you should do if you want to, for your notebook, have the total candle range theory for back testing. Okay. But this is just for this one candle, candle 3. So, and what I would do as well, keep all my longs and shorts together. So was this a long? That's a short, that's a short, and that's a long. So I'm going to switch this and put that there. Okay. So here are my longs. This is 9 a.m. So at 9 a.m. every single day, this is what I'm looking for. This is how the first hour should look. And so, or something like this, a straight rise, maybe retracing to a fair value gap that holds and then it keeps going. Okay. When I'm short, okay, straight drop, a little bit of a retrace, but this doesn't scare me because not only does this fair value gap up here hold, but as well, the open price of the candle held as well. And then it just did a straight drop. This one here, same thing. You know what I didn't do though is one with a wick. So let me do that because that's very important. So I'm going to go to the 4 hour for that one. Let me get rid of all drawings and indicators. Get out of the replay. Let's find one with a wick that's less than 10 pips. This one I'll just try to do manually. Let me go to another pair for that as well. And you can kind of eyeball it. Like I think this one may work. Did I just do? I think I did Euro New Zealand. Let me make sure. Euro Australian. Okay, no, we're good. All right. Even if I didn't know, it's the same thing. All right, so this candle right here is at 9 a.m. Let me measure the wick. I go to the open price, just move my tool down a little bit. It's 8 pips, so that works. Yes, because you will have wicks. We wish every trade would go straight into profit, but that's just not reality. You're going to see more wicks than you won't. So I'll mark the open price. Yeah, and this is going to be a lot more common, so it's good we're doing this. Replay option. I'm only studying this one candle right here. Okay, so we drop down to the 5 minute. We mark our first hour. That was what, 9 a.m. The vertical line, 10 a.m. is right there. Okay, so this is it. This did not give us a lot of time. So your best entry here would have been at really would have been right here at 9:20. Right there. Why? Because price went down, but then it closed above the open price of the candle. So that right there is a little signal that, hey, you might want to get in. Then obviously we have our fair value gaps. Can't forget about that for confirmation. We got plenty of them. And see here, it actually retraced into a prior fair value gap. You'll see that too. So if you see that, sometimes it may retrace into one that was created before the candle opened. That's fine. And like I said, we already measured the candle wick. The candle wick is less than 10 pips. It was about 8 pips. So that fits. And this gap held up. So it just all came together. So that's our perfect entry. And we could have got 1 to 5 on that one. Awesome. Okay, so let's see. That's a 9:20 entry. So we take our picture. All of this is in the first hour. Okay, that's all we're doing. That was a long. And like I said, for me, if the wick is more than 10 pips, I don't trade it. I'm not interested. And I'll show you a live trade that I'm in at the end of this, just as a bonus for everybody who's stuck around this long. Okay, so but that's that. That's a 1 to 5. Let me do the write up on that. So what did we say? 9:20, I think. This was a 9 a.m. 4 hour expansion. 9:20 a.m. entry. 50 pip rise. Okay, 1 to 5 easily. Okay, I just would have been scaling in right there. Just add. Price never even came back. You would have been out of this trade before the second hour even hit. I mean, you're out right here. Okay, so yeah. So let's get rid of that. And let's find a bearish candle with a wick that is less than 10 pips on the 4 hour chart. Then we'll call it. Then I'll show you the real trade I'm in, and then we'll call it. I feel like I keep doing the same pairs over and over. Let me go. Let's try this one. Okay, so bearish with a wick that is less than 10 pips. Let's try this one. Wait, let me see what time this is. Yeah, 9 a.m. That works. Okay, I'm looking at this red one right here. 4 pip wick. Awesome. I'm going to mark the opening price. Replay. Right there. 5 minute. Okay, yeah, you're going to see more of this than just the straight drops and rises. But let me mark my first hour. So if it started at 9, I'm done trading by 10. Bang. Where's my entry? If 10 pips is your rule, oh, let me get the fair value gaps. Were there any prior fair value gaps to the left? None that I could really see. So sometimes people use that, what's called the change in state of delivery. In other words, you look at the candle that made the high between your open, which was at 9 and 10. And when price closes below it, you could take that as a sign that, hey, look, price is likely to continue. The candle that made the high is right here. They're kind of equal, but it's here and also here. I would take this one. So some people mark the open price of this candle like right here. And they say, okay, since this candle made the high, once price closes below it, then that means price is likely to continue. The close below came right here at 935. It then retraced into this fair value gap, and notice how the gap held. So our best entry would have been in the gap. Best entry would have been right here at 945 sharp. Okay, you have to make your entries fit, right? You have to make them fit though in this hour. After this, like I said, the behavior dictates that the rest of the time you should be making money if you're right. Okay, so price dropped, and this is a shallow drop. It was only good for 20 pips, which isn't a lot, but Swiss is a low ADR pair. But the behavior is still the same though. Okay, you still got to drop. So if you scaled into it, 1 to 2 still ain't bad if you're risking enough money. But anyway. All right, so this one worked. So we will take a picture. We'll go to our section of shorts, paste it, and we document some of the, you just document what you see. If you choose to change state of delivery type deal or fair value gap entry, either way, it doesn't matter. But I'm just going to note the entry time. This was at 9:45. So this was a 9:45 entry, 20 pip drop, change the state of delivery off high. Wick was, how tall was the wick? From the open price went up 4 pips. Okay, and that's it. Okay, that's it. So you just build a little screenshot library of these, and that's it. And then when you have a candle range theory that you suspect, then you can refer to these, and say, okay, what should price be doing once I take my trade? What you really want to focus on, though, is, of course, entry models in the first hour, right in there and there. Let me make this a little bigger so you can see it. Okay, you want to really hone in on your entry models to say, okay, what should I see in this first hour to make me press the button? Here, study this price action here. Okay, this one didn't give you a lot of time. Okay, first entry here, your price mount here. Sometimes it's going to be real early. You got to hop in ASAP because price is saying, hey, we're going to go. And you got to just get in when you can. Okay, what do you see? Whoops. What's here? What's interesting here? Okay, this first, that's your bread and butter right there. Okay, the narrow road. Okay, right in there. What do you see that makes you press the button in this first hour? All right. Okay, so now I'll show you my live trade. Let me get rid of these drawings. Might win, might not, but I'm in GU short 4-hour chart. Okay. So the reason I took this trade, initially I took it off of uh, I had a short bias going into the New York session, which was back here. But then I said, okay, I think this 4 hour candle is just going to continue down is my point. So this isn't an 8 hour trade. I'm looking for just a continuation. So it might work out, it might not. I don't know. But this, so again, the first hour, let me mark out the hour so you can see it in real time. This was a 1 p.m. candle, and it is now 2:04 p.m. So right there, okay, that's the hour. All right, and regardless of the time, now I can compare this. Let me go back to my shorts to this. See how that works? So is there anything that looks similar? All right, now obviously these green fair value gaps, we hope they get erased, but for now, even if I take them off, okay, and just want to do that, that's fine too. But I see, okay, I'm looking for something with a wick. How big is this wick? Let me measure it. This wick was about 9 pips. Do I have an example of one that was 9 pips here for a short? No, no. Okay, well, this one was 4 pips. Okay, what did this one do? Is there a fair value gap here? And you just look at it like that. And I think there was. Let me see. Yeah, okay, all right, cool. I do see a fair value gap in my trading window because there's one here. And then here's one here. So I think my odds are pretty good that price is just going to continue down. And that's the benefit of having the library. So I could set a price alert here, and I know that, okay, well, if this fair value gap gets taken out, I probably want to go ahead and just exit the trade because according to this fair value gap held. So if this fair value gap gets taken out, then I might be in trouble. Okay, and that's how you have to think about it. All right, because sometimes you play offense, sometimes you play defense. For the first hour, I'm playing offense. I'm attacking. After that, then I have to play defense to see, okay, is there anything that could go wrong that will make me think that the trade is going against me? Now my entry was up here because I anticipated I caught it to the tick because remember that I don't want to see them be more than 10, and since it went up by 9, my stop loss will be right here. But I can get out early because of these fair value gaps here. I'm counting on this momentum to hold out for the rest of the day. And I'll probably get out around 4:30, 4:45 as long as price keeps going down and if these fair value gaps can hold. All right. So, but that's how you have to do it. Okay. So I hope that makes sense to you. I appreciate you watching and time and attention. This was a deep study on candle 3 of the candle range theory. Rewind what you need to, take screenshots, build your library, do what you can to be a successful trader. I thank you for your time and attention. Have a great rest of your day.